Mark Avallone joins me now to talk about all of this. Mark, you are expecting some summer volatility. So as an investor, how do you play that?
Well, good morning. And we've had a lot of consecutive months in a row. I think October last year, ever since there, it's virtually been a straight line up. And that's climbed a wall of worry. It's climbed a resilient Fed that is not lowering rates, hasn't hinted that a rate reduction is coming. And that's a good sign for a resilient market. But eventually valuations come into play. And when you're at these lofty levels, if something exogenous happens, if there's a disappointing number tomorrow, if we get another too hot jobs market, a higher inflation number, if wages remain persistent, or any of these global uncertainties continue, then I think we have a market that's priced for perfection. And all I'm suggesting is investors need to be prudent. And in fact, patience may be a rewarding strategy right now.
And I think you say something that Stu says all the time, Mark, that, hey, what's wrong with kind of taking a seat, investing in a bond, get 5% interest, and just kind of let things play themselves out before you jump back in? Is that a reasonable strategy?
Well, if Stuart Varney says so, it has a lot more credibility. That in this case,
that's true.
You know, it's worked for a lot of lower risk investors until we had the run up in the stock market. Because yes, Stuart and I talked about that for the past few years. And there is a place for bonds in people's portfolios. There is. Not everybody wants to be 100% in stocks all the time. Stocks are a volatile asset class, and they can lose money at any time for any reason, known or unknown. So bonds can fill out a portfolio. And right now, where the yield curve is positioned and where the peak interest rates might be enforced, and we never know for sure, but a Fed is stubbornly high, but they're not talking about raising right now. Well, that could be a better entry point because you'll get paid to wait. And if and when rates drop, you might have a capital gain, which would be a reverse of those capital losses we saw in 2022.
Right.